Dow rising by about 8 points, 2 points for the S&P 500 and about 10 points for the Nasdaq. Let's bring in Yu-Dee Chang, who is Principal and Chief Advisor at ACE Investment Strategist, joining us live from our Washington studio, and take a look at that beautiful picturesque setting behind him. Yu-Dee, nice to see you today. Let's talk about the oil price. We saw another spike to 2.5-year highs, but despite that, the US equities market also moving into positive territory. Are investors starting to feel a little bit more comfortable about the oil price?
Yeah, I think so. It's kind of interesting. I think this high oil prices maybe over the long term it's going to take a little bit bite out of the economy. However, on the short-term basis, it's more psychological, especially to the U.S. I think this higher oil prices, especially with the Brent around what 113 per barrel, is more detrimental to the Asian markets and the European markets more than the U.S. market. That's why the U.S. market, after a couple of days, a week of hiccup, basically is putting it behind. I think if the price of oil goes tremendously higher from here, of course, it's going to be detrimental to the market. But at this level, pretty much U.S. are used to it.
We're getting warning signals, though, aren't we? If you take a look at the Beige Book, for instance, businesses warning about the pressure to pass on higher costs of businesses. Some of this, of course, the input costs from raw materials, but we've got to start factoring energy prices at some point. Isn't this a sign that we might see some slowing factors for the U.S. economic growth story, which has been fairly strong to date?
Yeah, that's the consensus or the so-called expectation, but you're pointing out correctly, data actually shows otherwise. It shows the ISM number, the manufacturing number has been great. Even the weakest link of the economy, which is the employment numbers, today's ADP numbers, is showing that, wow, employment is coming back as well. So all in all, the fundamentals of this economic recovery, data-wise, is showing you it's well on its way, it's taking footing too. So I think the worry is always there, but the truth of the matter is the economy is actually doing pretty good.
Yu-Dee, from a strategy point of view, there's still so much noise and volatility in this market. As an investor, would you be advised just to sit this one out and not take on any major positions until the dust really settles here? Or are there any opportunities out there?
I think that's a fantastic advice. I think for me, I have other reasons too, because we also look at the market from a statistical point of view. Since 1920, over the past 90 years, based on the U.S. market, at some point in time, usually in the current year, the market has been lower than the previous year's close. And on the average, it was lower by about 9%. We haven't had a decent correction in this market since middle of November. So all indications is showing me this market is getting tired on a shorter term basis. So I personally am expecting a pullback or correction in the market anyway. So along in conjunction with this political turmoil in the Mideast, also North Africa, I personally are taking a very cautious stance. I believe we will see a decent correction in the market, somewhere in the magnitude of 8 to 10%, at which time I actually will like the market very much, want to aggressively getting back in this market. So I actually agree with what you just said, that investors should be cautious at this point in time.
Okay, we'll talk about getting back in and timing with Yu-Dee Chang, ACE Investment Strategist, when we get back to him live in D.C. in just a bit. Questions for him, email us at squawk@cnbcasia.com. In other news this morning,